Can we talk about just sort of tactically, what does a product through Inclusivity Solutions look like, and how is this going about addressing the solution of maybe moving down the pyramid a little bit more and creating products for the mass market consumers in Africa?
We started that premise of around penetration only 3 to 5% of the population, and they're typically focused. Those insurance markets are structured around pretty much the colonial, post-colonial infrastructure in those kind of markets, focus on the businesses and the high net worth individuals. So they really aren't relevant for the mass market, which is what insurance was always designed about. We basically first need to understand the needs of the customer. We invest quite a lot of our treasure in human-centered design research and market research to understand the needs of the customers and design products to fit their needs. And then once you've got the product, you then need to understand how to offer those products to the customers and obviously how to make it work. So again, thinking through the distribution models, we leverage those distribution partners and essentially then match the products to those distribution partners based on the needs of the market and their kind of core risks, and then design the way of how do we reach those markets and how do we collect premium effectively.
So can you talk a little bit about those different types of products and how just everything that you talked about manifests itself in the actual products that are distributed via your B2B partners?
We broadly now think around payments being three broad areas. And on one hand, we basically have loyalty products. So with Equity Bank in Kenya, and Orange in Cote d'Ivoire, and Airtel in Rwanda, we've launched loyalty products that basically are designed to incentivize kind of positive behavior. And if you think of in developed countries, the old practice of embedding insurance into a product, for example, your credit card, you get free travel insurance. The more you transact, the more you spend, the more positive behavior you're engaging, and the more insurance you get. So you're rewarding based on your behavior, leveraging behavioral economics. The second kind of category we call bundled cover. And that's often where a client makes a decision once and then basically agrees to take up insurance along with another product or service. So for example, remittances and insurance. So we begin with MFS Africa looking to see how we can give clients the opportunity to opt in for insurance so that every time they make a remittance to another country, insurance is included. The premise is around trying to drive frictionless payments. People don't want to be able to have the hassle of paying, $1 or $2 a month when it's harder to drive that behavior. And that third category is around these voluntary recurring payments. And that can be paid via airtime, via debit order, or some facility. It could be daily payments, weekly, monthly. That's very much your voluntary type models paid for by the customer. And certainly from what we're seeing on the insurance side is you want to strategically position insurance in such a way that it's seamless, it's frictionless.
Can we talk a little bit more specifically about the remittance insurance product with MFS Africa and I believe an insurer in Rwanda? How exactly does all of that work?
In research we've done in various markets, we found that between 80 to 90% of pretty much everybody we've interviewed would rather buy insurance from a mobile operator or bank than an insurer. The trust is so low that take-up is going to be incredibly tough. So we leverage our big distribution partners with their trusted brands. We're really excited to have launched with MTN in Rwanda and MFS Africa, the payment hub, and Radiant Insurance, the insurer on the ground, to basically launch a remittance insurance product that is designed to incentivize customers and reward customers who use the MTN and MFS Africa remittance facility. So what that means is as clients remit or make the payments, the more they use that MTN hub, the more insurance they get. If you're just making one transaction a month, you'll get a certain level of cover, but if you do two or such, then we basically designed it around the number of transactions, but also the value. Because at the end of the day, the value is what's important, again, for our partners, but it's also pretty critical for our end customers. We know penetration of insurance in Rwanda is around 2% of the population, and to have these type of products, which basically in this case will ensure that your remittance continues to get paid if you're hospitalized and not able to earn income, is pretty critical.